Grow your practice, grow your wealth, grow your impact. Find out how to spend less time in the dental chair and more time on the things you love.
Welcome back to the Dental Wealth Podcast. I feel like I haven't said that in a while here. We've been just a little bit busy, and with me, as always, in the studio is the Mr. Wonderful himself, Mr. Eric J. Morin. Welcome to the show.
You know what? It's so glad to be back. Well, people don't know, we have in the month of October and November, we have so many giant events, and then in those, that's always our busiest time of year. And then we had our giant leadership retreat where we gave away a Bronco, and we had people from amazing teams, amazing speakers. Giant 30-foot screens is a huge deal. We do it annually, and this was no different. And it was an amazing few days, emotional few days, a lot of high fives, a lot of celebrations, a lot of tears, and so it was an amazing event. So we apologize for being away, but it's duty calls, and we've been in full event mode. But here we are. Christmas is coming. Thanksgiving is done, and did some Cyber Monday shopping for the business. Did a little bit, admittedly, some Black Friday shopping online, I think, and yep. And here we go, getting ready to finish out the year
the
strong,
deal's
man.
Coming in, baby.
You try to stay away from them, but they got me, Matthew. They got me. I got grabbed by one or two.
I like to call it unsubscribe season. Because you get 15 emails a day from the same company. I think Spanx, honestly, is the worst one for me. Spanx their marketing team has the same email that goes out like every 5 seconds.
Can I ask you a question? Why you get Spanx ads? I'm just,
This is for Carolina, okay?
Sure,
they send me They know I'm a sucker, and I'm like, all right, I need to get some of these. They're like, if I see him,
he's trying to get that 6-pack ab look. He's trying to get that right? Spanx.
Hey, Kim Kardashian did just come out with the Skims, and they got the NFL players wearing them now. I'm like,
oh yeah,
maybe. Yeah. Instead of eating healthy, going to the gym, I might just wear some Skims. I'll just pull that off and call it a day.
There's like 400 of our listeners right now who just went and researched Skims. They're trying to tighten it up, right? I like it.
Hopefully, type in Skims male, because if you don't do that, then you'll be like, Matthew's really, this is a questionable setup here.
There was an email that was sent to my personal email on Friday, and I went to go pull it and find it, and I was like, holy moly, the amount of Black Friday emails that came in. I was like, it took me like 27 minutes to find one email.
It's like 20%, 30%, 40%, 50% off, and you're like, okay, I guess I'm going to have to take a look and see what I can get here. It's a shame that Porsche doesn't have a
Half
Black
off.
Friday sale. that would be nice,
Half off at 11.
I'll wait for that day.
And rivalry Saturday is over. Michigan's the big winner, and it's all that stuff's over.
A lot of people that are listening to this podcast right now are all smiling. We had at the retreat, we had a doctor that was like, "Is there any way we could put the Michigan game on the big screens?" We were like, "No, we can't do that." But we thought about it, but we can't do that. Yeah, rivalry week is done.
I sent Elijah a text this morning about the Ohio State, because he went to that game, so we were talking about it. So it's kind of funny. But
yeah, him and Brian were there. I saw their pictures. I was like, it looks cold. That's the only thing I thought.
It looks cold, right? So what are we talking about today? Let's talk about something brilliant.
Speaking of Black Friday and all of these things, one of the reasons why a lot of companies do this, and Black Friday even got started, was so people at the end of the year, they can have a tax benefit. A lot of businesses started looking at that. So, one of the things I want to talk about today is, taxes, the importance of financials for the end of the year, and how that ultimately, if you utilize that and lean into getting that proper advice, it could set you up for 2024 in a better way than you came into 2023.
Yeah, I think that in dental as a whole, accounting and tax is a complete mess. I don't hold back on that. It's a complete disaster. It just is. And let me speak to that a little more specifically. I think that when Tower was started, one of the things we did was hire a CPA to start working with our clients' books, because the idea of saying, first of all, let me kind of, we'll talk about tax write-offs. I think on this podcast we talk about some tax write-offs. We talk about things to do at the end of the year. We talk about accounting. So I just want to, this is where I'm going with this, by the way. So those of you kind of wondering where I'm going. But I want to start off first with let's talk about books for a second. Well, There's a few challenges. One is that when someone says they're a dental CPA, just so you know, that's all just marketing crap. Okay. I'm a dental CPA. Just so you know, dental, if someone says that I only do dental, just understand that means that they're probably not the greatest CPA in the world anyhow, because, and let me explain that. Dental cash accounting is about the easiest damn accounting in the entire world. Like literally it is the easiest form of accounting. Like cash accounting is super easy. So to say that you're a dental CPA doesn't really actually make you sound like, I'm not saying that you can't have a niche, and I'm not saying there's anything wrong with it. I'm just saying that, look, a lot of times when people started becoming dental CPA, they ultimately formed a niche. But to say that, you have to be a dental CPA because you know dental better, dental is literally almost the easiest accounting there is. It is the most basic form of accounting. It's not percentage of completion, accrual-based accounting or something like that. It's cash. It's so easy.
Yeah.
And yet, it is messed up more than any type of accounting. So some of these accountants that are like, I'm a dental CPA, are some of the worst CPAs, and it's like almost like the doctor who barely continues their license. So just when someone says like, I'm a dental CPA, don't check mark that and be like, that's my guy. Well, hold on. That doesn't mean they're any good. Okay. Just so you know, when someone says that, because 90% of books that I've seen in dental, and I've been doing this for a long time, are wrong. They're just wrong.
Yeah.
And it's even worse if you say, well, I do my own books. Oh gosh, that's even worse. Please. First of all, if you have time to do that, you shouldn't be doing your own books anyhow. Okay. So if you say, like I had a dentist years ago who was like, I remember his name. I'm not going to say it on the air, but I'm telling you, I can remember this guy's name because he was like, I'm the best dentist at accounting ever. I was like, well, congratulations, mastering like a $50,000 a year job. Like, I mean, so it doesn't make sense for you to do your books. If you are going to have someone do your books, have someone do your books that actually knows what they're doing, who's actually really great at it, okay? Because it does matter. It is going to impact your clarity on your business, your peace of mind, your decision making, all the things. So it's important. And then for those of you that are multi-location, quit putting all of your freaking entities in one set of books. That is the worst idea ever, because you can have a compiled set of books so that you have one entity that is compiled of the multiple entities or the multiple locations. But if you have all of your books in one set, like all locations, you have 5 locations in one set of books, you have no clarity on your business. You have no clarity on how it's doing. You have no idea how that ultimately profit center is doing. You can't make adjustments or decisions because you don't know. It is probably one of the worst, and you're doing it to probably save a little bit of money, but what's happening is it's costing you 10 times as much because you have no clarity to make decisions. So, going into the end of the year, I think that most people listening, that you need to look at your relationship when it comes to, and I'm not even talking about tax yet. I haven't gotten to tax yet.
Yeah.
I'm just talking about accounting, and say, hey, look, do we have a clean set of books? Do I run my personal stuff through it? If I have multiple entities, are they on separate books or are they on the same set of books? Do I really know what's going on in my business? Does somebody get with those books and actually tell me what's going on in the business and talk to me about it? So, because by the way, CPAs as a general went to school for expenses and taxes. So when you ask your CPA a question, they're going to answer it in taxes and expenses. They are not business people. I know you think they are. They're not. That doesn't, no disrespect, we employ multiple CPAs on staff. That doesn't mean that I'm not anti-CPA. What I'm trying to say is that you need to understand what they went to school for. So they're not there to look at your books and tell you what business decisions to make. That's not what they went to school for. They're there to tell you taxes and expenses. And that's it. So not only do you, going into the end of this year, need to make sure you have a clean set of books. If you've got the wrong relationship when it comes to accounting and tax, you need to change it now. Let them finish up, but you need to be looking for a new relationship now. You need to get ready so you can start 2024 with a new relationship so that you can start clean. You need to have accountability for each location. You need to know exactly what your numbers are, and then you need someone to tell you what to do with the information that's coming out of the books.
What do you think so we know that the financials in dental are not the best.
They're not.
What do you think the main cause of that? So, at some point it just became a thing, like just in dentistry in general, Monday to Thursday, that became a thing because someone one day was like, we don't want to work on Fridays because we'd rather go to the country club, do those things. Why do you think, like, is there anything that you can point to that says, this is the reason why is it because the dentist tried to do them? Is it because there's lack of clarity? I guess you could, if I put two sets of financials in front of a dentist, I would pretty much be willing to bet that they wouldn't know which one looks good and which one doesn't.
That's right.
Do you think it's the lack of knowledge on financials, or do you think it's just the lack of, quality CPAs and those type of things in the industry?
This is loaded. Do I get honest? It's like honest. Like, I was talking to a doctor that came in recently, a client, and I looked at him and I kind of posed a very hard question. He's like, we're about to get real. I was like, yep, we're about to get real. All right, you want to get real on the Dental Wealth Podcast? The truth is, this might offend some people, but it's just true. I think a lot of CPAs that are in dental aren't very good. That's the truth. If you want the truth, that's the truth. I think you had CPAs who didn't get accepted to the Big Four, who weren't going to make partner in a Big Four, even if they were part of the Big Four. They weren't sophisticated enough in their accounting expertise and their expertise to go after $50 million, $100 million companies. And they looked at dental and they said, man, I got cash accounting. It's the most easy set of books. These doctors don't even know how to read their own financials, so they won't even know if I did a good job or not. No one's looking at it. I can create an entire business. What I'll do is I'll tell them I'm a dental CPA, so they'll think I'm really good at what I do, and I will run the easiest set of books with no accountability because no one will even know if I'm doing a good job or not. And as long as I file their tax return on time, they're really never going to say a word to me. This is about the most cush job that I could possibly get as a CPA. I can create my own business. It's a cush job. No one's ever going to look at the work I do. It's cash accounting and it's easy. And that's what happened. And the entire industry was proliferated with these individuals that weren't very good at what they were doing. And then, this is real. And look, we might have some dental CPAs listen to me. And if you are, you know what I'm talking about. And the truth is, that's what happened to this industry. The industry was plagued with mediocrity when it comes to accounting. Then you had the financial advisors basically telling them, hey, what do you have left over in this business? And we'll shove it into a 401k. So they were ripping all the money out of the business anyhow. Nobody was giving them good advice. No one was giving them good business advice. No one was giving them tax advice. No one was giving good investment advice. And so this is why the average industry, inside this industry, people were growing at 2.5% forever. And the industry wasn't doing what it needed to be doing. The accounting was just absolutely horrible. But it still happens to this day. I'm still seeing it. Like I still see books today that hit my desk that are just trash, if I'm honest with you. And I hate to be negative. I want to get high vibration here, but they are, and they've got to be cleaned up. So. Yeah. And then how many times do we have a 5-location practice come to us, and folks listening, this happens all the time. We have 5-location practice come to Tower Leadership, and I'm like, and their books are a complete disaster. They're not clean. They are still running personal stuff through. They don't know each location, and it's bad.
And I think there's 3 things ultimately that I think it kind of boils down to. I do think at one point there was the best intentions in the world to come in and have the best accounting possible because it is cash based. Like it should be, you can make it robust. Like you can do all the budgeting, forecasting, all of these things. And a CPA one day came in and tried to introduce that to the doctors, and they were like, what are you talking about? Like, I think the sophistication 20 years ago wasn't there for when the CPAs tried to enter the marketplace. And as we're seeing more and more locations go, multi-location group practices, that's a thing of the past. And we're seeing that. We see a lot of the multi-locations, like you were saying, coming in, and they don't, number one, the biggest issue we see is they don't have financials every month. I don't understand how you run a business if you don't have your financials. And number 2 is they're not right.
Yet, even though the work is mediocre, they're still being charged. I just saw a doctor paying like $11,000 a month for garbage, but it's not like they're now some people don't want to pay any money, and we got to remember that as you grow in sophistication, your cost of goods, ultimately cost of services in your case, is going to go up. Of delivering services, you're going to have to increase your sophistication, but I either see people paying way too much or way too little for it's not an appropriate sized amount for what they're actually getting. And some of these tax CPAs and some of these accounting folks, they know that you don't know, and so they're just charging crazy amounts. So I think look, as we kind of move away and just talk about tax for a little bit, I'm kind of really tough. If you can't tell, you're like, God, Eric's kind of on one this morning. But I'm on one because I'm telling you, most of you, when I say most of you, I'm actually talking to you. Like, so if you're driving right now, I want you to look in the rearview mirror because I'm talking to you. I'm telling you, your books are crap. And that's an ugly word to use, but I'm saying most of it, and I'm being serious. Like, I'm kind of on one this morning, but I'm telling you, your books, okay, I'll take that back. I'm just kind of joking, but to be serious, your books probably aren't very good. Your books are probably inaccurate. Your books probably need to be looked at. You would have to argue if you looked at yourself in the mirror and say, do I really, so this is the question to ask yourself. Like, one, like, do I truly have clarity when it comes to my location or locations when it comes to the numbers? Two, do I know what to do with the information that's coming out of these financials to make decisions? And three, am I with the right relationship that can actually prepare me for the future? Those are three questions that you really need to ask yourself. And one of the things that I find difficult is when, and people ask me this sometimes when they want to walk away, they'll stay with their CPA even though the CPA is doing a poor job. They're overpaying in taxes because they don't want to hurt someone's feelings. They've formed a friendship or relationship with this person, so they're like, but Eric, how do I break up with my CPA even though he or she's doing a very poor job? I'm like, well, I'm not a psychologist. That's not what I do. But I'm telling you, your information is inaccurate and you've got to get that clean. So something to think about is like, is this really truly the relationship for you in the future? And so so let's switch over to tax, but I'm just telling you, if you are already saying, hey, look, Eric, these questions I can't answer, you're in, like, most people have outgrown their relationship. Most people looking at this, go back and look in your rearview mirror again, because I'm talking to you. Most people have outgrown their relationship. Most people listening to this podcast, when I say that, I mean out of 100 people, every 100 people listening, 99 of you have outgrown your relationship. And you need to look for the next relationship, the one that can get you to the next level.
Mm-hmm. And I think, it's funny too, because, we have majority of our clients are in our CFO and accounting services. The ones that come in and they find it difficult to move on from their CPA, those are the ones that always come back to us. And I find it funny when I talk to our advisors and they say, all right, these clients are having struggles with cash right now. They're having struggles with cash. And our advisors try to get the financials and they can't even get a hold of the financials. The doctor hasn't gotten them in a couple months. So you look at it and you say, all right, so you're having cash issues, yet you don't know what the financial situation of it is. You can't get your financials. So how do you expect to fix your cash position if you don't have the data to show you what to do with it? So I just think that's always funny to me, especially when the best thing that happens is when I take the phone calls in, when people call in and they give me their numbers and then they end up coming to a focus day or a foundation and their numbers are completely different than the ones that they gave me on the front end because they actually ended up getting their financials. And that just shows me, and I have a large sample size, guys, a very large sample size of call-in doctors. So I know what it looks like. And, what you're saying, Eric, is 100% true. It's a mess. And I think, if you're struggling with trying to move on from a relationship, you have to look at the vision ultimately. We always try to throw in a little bit of like philosophical stuff into these podcasts so you can rethink about these things is, where are you trying to go with your business? If you're trying to stay the same, then maybe you don't need to change your CPA. But if you're trying to grow, if you're trying to scale this business out, go impact a lot of people, you need to upgrade the sophistication. That's when clients come to us and we have this conversation with them. They're looking to grow. They're looking to expand and do wonderful things with their team and their community. So they need to upgrade the sophistication. But if you're just sitting on here and you're like, nah, I'm good, then you might not need to do that. And that's fine. But if you're looking to grow, you're looking to do these things, you have to always go back to the vision of what you're trying to create. Does that CPA allow you to create what you're trying to get accomplished with your business. And then it ultimately flows into tax. And I know you have strong opinions on the tax world too, because we all know what happens at the end of the year with taxes. It's a surprise bill.
Well, part of this is, right, poor accounting. So the tax bill is often a product of poor accounting. What I mean by that is this. Month by month, like when January rolls around, you should say, okay, my anticipated tax bill based on January is $427,000. After February, you go through and say, okay, it's $416,000. After March, you go and say it's $512,000, whatever it ends up being. It's like you should know that throughout the year so that every month you're putting aside capital, knowing what the tax liability is. If your financials are late, then you have no idea. If someone's not telling you, hey, listen, by March, you should have $180,000 put aside for taxes so far this year, then you're already so far behind the mark. And because here's what ends up happening. So if all of a sudden August rolls around and you have $600,000 in your tax account, all of a sudden you go, okay, we got to figure out something to do because I don't want to give away $600,000. Like there's got to be something we can do to negate this $600,000. And that's the sophistication we're talking about. If you all of a sudden knew what your tax liability was and then you had the money out put aside, and then all of a sudden now you say, well, I've got $600,000. And now you look and say, I want to negate this $600,000. Now you're looking at reinvestment in your practice, and you have the ability to grow and reinvest because you know your tax liability. So you have complete clarity of cash flow in dollars, which allows you to grow, add a location, add real estate, add all kinds of things instead of waiting until December and someone saying, hey, you know what, Doc, here's what you should do. You should buy some equipment you don't need right now because it will reduce your tax liability. And you should ultimately put some money in your 401k. If that's the advice you're getting, you are in the wrong relationship. It is the worst relationship. If the only advice you get, if you're not having planning throughout the year and the only thing you get is a December, hey, throw some money in a 401k conversation or buy some equipment you don't need conversation, that is the wrong Tax CPA. You can say, Eric, I was listening to Eric on the Dental Wealth podcast. So this is your permission. He said to fire you. And so you just blame it on me. Say, I was listening to Eric on the Dental Wealth podcast. If you got any questions, call him. All right. So in all seriousness, like if that's the advice you're getting, you're just in the wrong relationship. You've outgrown your tax CPA and you've got to figure out like, okay, well then what do I do? You ask your friend, but the problem is your friend's probably in a poor relationship too. Yeah. And so, it's one of those ones where you've got to reach out and say, hey, look, what do I need to do from this standpoint? Because there are right relationships there. And here's the irony in all this. As you're listening to me, you're thinking to yourself probably, Eric, I hear what you're saying, that I probably got to, my books are probably wrong. I'm not getting clarity. I don't know what my tax liability is. I am the person who only gets told to put things in my 401k and buy equipment I don't need. But I don't know what else to do, and I don't know where to go, and I don't want to spend any more money, and the money is the other thing. So that's the biggest thing. Hey, but Eric, and here's the irony. I don't want to spend any more money. Interestingly enough, when I do an analysis half the time, people are overspending on accounting and tax that's not very good. Believe it or not, most of you can upgrade your relationship without actually spending more money. You're actually already allocating the capital to professionals who are not able to meet the sophistication of the future of your organization. And so it wouldn't actually cost you more, or it would cost you very little to get the clarity so that you could actually grow your business the way you need to grow it. That's the irony in all this, is that it oftentimes doesn't cost you any more to actually upgrade.
Yeah. And I think, it's funny because right now, for those of you that don't know, we just hired a new tax CPA. So he had some experience in the medical world, but he worked for a Big Four, and we wanted that. We were looking for someone that had the experience doing that. So when he looks at your tax returns, he's looking at it from a large perspective instead of just a small dental niche. And what he's finding, we're doing like a complementary tax return, like tax analysis, and he's finding so much gold in these tax returns that were just missed over the years. And it further proves our point of the lack of knowledge around it and knowing what you can utilize those funds for, because this is the end of the year. The main reason why we're having this discussion is because this is the most important time. Like, I think, you guys should be setting budgets for next year. Like, what are your Q1 budgets, Q2 budgets, Q3 budgets, Q4? What is our expected cash to come in the door? What is our expected patient count? These things all need to be happening now so that you can prepare financially for next year, because you have to have the reserves in place. There's so much going on for next year that you can set yourself up just by having the right systems, the right team, the right CPAs in place to help you be successful for next year. And people are unwilling to do that sometimes until they just have the conversation. If you say it costs, we always say, if it's an investment of 20, but they show you how to make 100, that pretty good ROI at that point. So I think when you look at tax and CPAs and those things, instead of looking at the investment, you have to say, all right, what is this? What am I going to get out of this? We've seen businesses just turn around when they just join our CFO and accounting, and they get proper financials, and they get an analysis on it, and they get projections. The business itself can double at that point just having proper financials. It's amazing to see what happens in a business when they know exactly what the numbers look like every single month, and then they're prepared from a tax perspective at the end of the year. It's unique. It's kind of fun to watch.
And here's the thing about it is that, some of you, you listen and say, well, he just wants me to maybe contact them about their services. Probably, but it doesn't have to be us. It can be somebody else too. It doesn't really, but the challenge is like, who do you call, right? You call your friend who's probably got poor accounting too, but they have a good relationship. So they tell you, hey, look, my buddy's good, but what is good, So how are they even looking at financials? How do they know? So I think go back to the questions. Here's what I would think I'll tell you on this podcast is you better figure it out. You better figure it out. It's probably costing you at this point hundreds of thousands of dollars, which will turn into millions. I could not be. That's why I kind of get like a little bit up on this, is because I'm like, look, you got to get this down. You can't have a business. It was fine when it was Dr. Jim and an assistant, a hygienist, and a front office person. That's fine. Okay. You worked 3 days a week, 4 days a week. You went to the country club on Friday, hung out with your buddies, had a beer. And this little antiquated business, you put some money in your 401k, you sold off, half the business and then the whole thing when you were 65. Those days are done. Those days are over. They're done. Move on. The sophistication has to be there. I just saw someone yesterday. I was just walking in yesterday and I saw this guy, literally, because we cleaned up his financials, literally we're showing him how to get $1.5 million more in valuation because of clean financials. Can it cost you $1.5 million? $1.5 million by not having clean financials? Yes. On the sale, he was going to lose $1.5 million because he didn't have clean financials. It's that serious. So you want to throw away $1.5 million? It's like you can't. You gotta have this stuff. And if you are thinking about even selling in the next 3 to 5 years, you really got to lean into this stuff because you got to get it cleaned up. You got to have advice, because people like me, the MBAs of the world, are going to look at your business when you go to sell it, and we're going to rip it apart. And your financials are a mess. Then what's going to end up happening is the valuation is going to be absolutely decimated, because I know you don't know what you're doing. And so I'm like ringing the bell, ding, 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 ding. If you think it's like December and it's time to turn it off and just, ring in the new year with some eggnog and, and whatever, and sit by the Christmas tree and call it a year, get up. This is one thing you need to do before the year's over. Before the year is over, you need to decide if this is the right relationship. Are you in the right tax and accounting relationship? If you say, no, I don't think I am, or I'm not sure I am, call us, or call somebody else. You don't have to call us. We're not here this isn't the pitch podcast. I'm not here to sell you services. I'm here to give you advice that you can listen to this podcast and get things from it so that you can grow your business. If it's not us, fine, call someone else. I don't, whatever. We're pretty back to, there's a lot of demand for our services. That's fine. It doesn't have to be us, but it needs to be someone. You need to get someone on the phone to look at your stuff and do a complimentary call and just take a look at it and say, hey, look, hey, worst case scenario, somebody gets on the phone with you and says, hey, everything looks good, Doc. I think you're in the right relationship. All your books are clean. You're maximizing all your deductions. Great. At least you can sleep with peace of mind knowing, hey, I'm good to go. But if not, you don't know. And so you don't want to not know. It's almost like I went to Mayo Clinic last year. And I got a whole physical. I'll be doing it again in March this year. They did a CT scan of my lungs, and they did, my arteries. By the way, 0 blockage. That's right. They looked at, I got to do the stress test, and I had to do 10 markers for cancer and all these other things. So I just wanted to know at the end of the day, hey, am I okay? Is my body physically okay? Am I missing something? Is cancer going to pop up on me? Is heart disease going to pop up on me? I want to know. And so I just needed to know. So I spent thousands of dollars out of my own pocket because I just wanted to know, hey, where am I at this age as far as my health is concerned? Is there anything I need to be looking out for? It's the exact same thing. There comes a point with your business and your financials where you have to say to yourself, do I need to know, do I have it all together? Am I clear? Am I missing something? Is it worth finding out if I'm missing something? Is it costing me tens of thousands, if not hundreds of thousands, if not millions of dollars to not have someone take a look at this? Am I missing deductions? Am I missing opportunities? Do I have clarity in my books? There are people that will do this for you. Everyone needs to build out an accounting team. It doesn't have to be internal, but you have to have an accounting team. And I'm definitely ringing the bell if you have some antiquated, if you're getting financials a month and a half after the freaking month's over, you definitely are in the wrong relationship. These things should be turned around within a few weeks.
Yeah. Or if you have a surprise tax bill.
But okay, so I beat up the CPA. So I'll give the CPAs a little bit of credit back. All right, here I'm gonna give them a little bit back. If you took home $500,000 last year, and your tax CPA calls you up and says you owe $180 in taxes or something, and you blame them, that's your damn fault, okay? I'll give them a little bit back, okay? If you take home $500,000, don't blame your tax CPA and say well, they never told me I had taxes due. Okay, you took home $500,000, okay? There's going to be taxes due. So I'm going to give them a little credit back, okay? Sometimes it's your fault. Sometimes I had a doctor one time who was he had just come over as a client. He had taken over $1 million home, and he was like, my tax CPA is not any good. I said, why do you say that? He said, well, he didn't tell me I had any taxes due. I said, you took home $1 million. You didn't think you were going to have any taxes due? So I'll give a little bit of credit back, okay? Some of this is on you and not the tax CPA, okay? You got to take accountability too.
Yeah. You got to figure that one out.
So how do we wrap this up, Matthew? Well, let's put a bow on this thing going into Christmas season.
No, I think it's, it's something to think about as you guys wind down the year. Is, you should always be looking at your relationships. Is this relationship getting me to where I want to go? With everything, with your trainer, with your family relationships, with your friends, those type of things. This is the time to do it. Don't wait till January to do this. Look at the relationships you guys have. Go back and sit down and say, what am I trying to create? What vision do I have for this company? What are my goals for 2024? You need to start looking at those things right now. Don't wait. Do that now so you can start planning for it. I think, we can beat up on, CPAs and the lack of clarity around financials and stuff, but you guys got to know where you're trying to get. What's the next phase of your business, of your life, and try to figure out, all right, what relationships do I need in order to get there? So I think, as we wind this down, you made it a great point just to, sit down, look at these things. If it's not right, then look at somewhere else, whether it's Tower Leadership or someone else. You need to upgrade your sophistication, especially if you're looking to go multi-locations or even a single location and add 10 ops in the next 2 years. You need to have these things together. Otherwise, you're just going to add more headache, more strain to your life.
Yeah, and don't wait until you get so big that The cost to clean all this up is hundreds of thousands of dollars because it's such a mess. So, do it sooner than later, get clarity, make great financial decisions, put your family and business on the right path, and I guarantee you go into every holiday season feeling much better.
I like it. Well, guys, as always, we will be back probably right before Christmas time, and then you guys will have holidays, and then we'll kick back off for 2024. But as always, subscribe, give the gift of the Dental Wealth Podcast this Christmas. Share it with someone. We love doing this when we can take some time away from our busy schedules to provide some value for you guys. And as always, if you guys ever have any, feedback you want us to talk about a certain topic, let us know. Let one of our team members know. Send a message in.
If someone isn't, on this podcast, we do our best not to push things, and that's not really what we want to do. As a podcast, we just want to provide value to the marketplace. But if somebody is listening to this, Matthew, and they say, listen, I don't know where to go. I mean, I know my friends, I know them. So what do they do if they say, hey, I'd love to call, over to Tower and find out whether I've got the right relationship. I need to call somebody. What do they need to do to do that?
Awesome. So you have two options. Ultimately speaking, you can call our marketing department and we can have a discussion, set up who you need to speak with. You can call 470-783-4621. That's 470-783-4621. Or you can simply email ken@towerleadership.com. He will make sure you guys are taken care of. He'll answer any questions you have, point you in the right direction, get you set up with one of our CPAs, one of our advisors, ultimately just to have a conversation. I think sometimes you have to be willing to have a conversation first to see if there's anything that you need help with. I think being vulnerable in that aspect is how you move forward as a company.
Love it. You guys enjoy, have a great week, and we'll talk soon.